Right. Good morning, student. Good morning, student. You guys hear me? All right. Good. Alexis, thank you. How about the others? All right. Good, Sean. All right. So, guys, I'll be replacing Miss Nurul, no? Um. So, uh, she's delivered her baby yesterday evening. Oh. Okay. So I called her yesterday at 3 something. And she told me that she will have a Caesar operation at 4:30. Oh, so when I call her, she seems like afraid, no, to go for operation, right? So today we're going to cover, and she told me that you have class today. That's why I need to replace her for today and to finish our remaining 4 topics. Am I right? So we have 7, 8, 9, 10. So today we try to cover 7 and 8, right? Then the remaining 2 topics for next week. Is it okay? Guys, okay, right? All right, good. So without further ado, we just start lah. All right, you can see my screen, right? All right, so topic 7 is all about financial globalization and securitization trends. All right. Okay, so first is multinational finance. So you know, right? Multinational finance is what? Owns and control banking activities in one or two countries. So they have physically operate in more than one country. So more than one country. So they have here in Malaysia and others in other countries, right? So for example, Citibank here, they given here Citibank operates offices in more than 90 countries around the world. Guys, do you aware that Citibank has been sold to UOB Bank since January 2022. Guys, do you aware that? Citibank. So UOB acquisition Citibank since January 2022. Guys, why? Why UOB buy Citibank? Anyone can answer me? Hmm. So I also wonder because my friends, one of my friends, she's working at a Citibank. And suddenly she said bye bye, something like that last year. So when I do some research, oh, UOB bought the Citibank. Okay. So they have acquisition. Okay. They have acquisition. For what? So of course, okay, to help grow in Asia Pacific, okay, credit card. So Citibank is one of the best credit card provider in Asia. All right. So of course, not only credit card, also the franchise and consumer loan businesses. Okay, clear? Okay. So you know, right? The functions of this multinational bank, of course, engage in business of deposit money for saving and checking account and make loans. All right. Okay. Next, multinational banking versus international banking. Okay. So whereby the international banking engage in cross-border operation and do not set up operation in other countries. They only provide what? They only provide products and services around the world without setting up the physical store, a physical bank. Okay, is it clear? Right. So they just offer products and services around the world. Okay, so it's given the example here. A Bank of America loan to bank in Poland is considered as international banking. Okay, they provide services for other countries. So it is called as international banking, whereby multinational banking, they have a physically operate in more than one country. Is it clear? All right. All right, next. So what are the reasons of growth? What are the reasons of growth of multinational banking? Okay, of course, first is what? Because of regulatory environment. Okay, so regulations from countries are different, right? So the changes for this regulation can pose a threat or opportunities. Am I right? Okay. For example, you want to set up a business at one particular country. Okay. So somehow the regulation change. So the regulation can be posed as a threat for you or as the opportunities. What kind of opportunities? For example, the regulations for the country, they ask for you to provide to use a digital products. Okay, so you the one company who provide the digital things. All right, so it is a opportunities for you. Am I right to provide? But if you are the traditional style of company, then the regulation has changed to use the um, technology. Okay, so it is a threat for you. Guys, are you clear? You clear or not? So that is the regulation environment. So it can be a threat or it can be the opportunities. Okay. Technology changes. Yes. Financial information. Growing diversity. Okay. What is growing diversity? A range of different things. Right. So when you go for another countries, you must look on what are the diverse things. So how you want to tackle the diverse. Right. And economics of scale. Economy of scale means what? Cost of advantage, right? So this is what? Cost of advantage. So you can increase production and lowering costs, okay, so that you can have more profit. So this is what? Cost of advantage, okay? Production is higher, but with a lower cost. So it is economies of scale means what? You can get more, okay? So that is why most banks, they open all over the world, all right? They become the multinational banks because of these 5 reasons of multinational, why they go for multinational banking, okay? All right. Organizational structure for multinational banking. The way in which a bank has arranged its lines of authority and communications, okay, it is the organizational structure, okay, and allocated duties and responsibilities. The structure may be diversional, geographic, or functional, kind or some combination of these, all right? So what is diversional, right? So each company, they have different style of organizational structure. Maybe you want to go for divisional. Okay, divisional means what? Employees are grouped into segment. Regard the products and services they produce. Okay, it is based on the product and services they produce. All right, or you may go for geographic. Okay, so it is based on the region, countries, what they serve. Okay, so they know how to tackle the region, how to tackle the diversity, all right? So it is easy for them to do the marketing because they know the background of the region well, all right? Or even they have a functional, okay? Functional refers to what? A different function. For example, the company, it's the structure of the organizational structure based on the function, okay? Whereby for the marketing, finance, or operations, okay, they put the structure based on the functions of the employees, okay, or even they can combine for all these 3 and make it one structure. Guys, so far okay? Are you with me? Hello, 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 hello. Hi guys, respond please. Raise your hand, raise your hand. All right. Okay, good. Like that, like guys. Don't let me talk on alone here, like that. All right, next. All right, so next we go for, all right, various organizational structure for multinational banking. Okay, they have correspondent banking, resident representative, bank agencies, yes, foreign branches, okay, foreign subsidiaries and affiliates, and consortium bank. Okay, so what is correspondent banking? Okay. Okay, so they have informal linkage between banks and different countries. Okay, it's set up when bank maintain correspondent account with each other. All right, so they facilitate the international payments through email or cable communication. Guys, so this is one, they work as the intermediaries. Right. Okay, so they work as the intermediaries and they provide the informal linkage between banks and different countries. Right. So what are the importance here? So helping customers in business abroad. Okay, so they don't have any office and manpower. All right. Okay. Next, resident representative. Okay, so they provide the customers help from their own personnel on the spot in foreign countries. Right. And to provide information about local business practices and conditions, okay, creditworthiness of local customers, and they are small appearance of an ordinary office rather than a bank. So guys, here they provide what? They provide the information about local businesses. So it's resident, right? Resident representative. So you know, you want to know the background of the residents, then you may go for resident representative. All right. Next, they have bank agencies. Okay. An agency of a bank in very aspect except it does not accept deposits. It deals in local money markets, foreign exchange, okay, clear draft, checks, and channel arrange long-term loans for customers. Okay, this is all those things. Okay. Next, foreign branches, right? So it's just like the local bank, all right? It is subject to both banking regulations, right? Reason for establish these foreign branches because they can provide much range of services, okay? Able to extend large loan to customer, allow customers much faster check clearing, and to compete on a local with the bank of the host countries. Guys, this is all the things of the function that you have to know, right? Okay, the functions. Okay, so everything is just same, right? The functions, right? Foreign subsidiaries and affiliates, right? So it is a locally incorporated bank that happens to be either completely or partially by a foreign parent. Okay, so they do all types of banking businesses. Okay, this is all those things. All right. Next, consortium banks. Okay, what is consortium bank? Right, a joint venture of larger commercial bank. Okay, primary concern with investment arrangement of loan and underwrite stocks and bond. Guys, so this consortium bank is for what? To fund project that is too large for one bank to do alone. Right. So another word they says that a joint venture of larger commercial bank for what? To fund project that is too large, okay, for one bank to do alone. So they will go together, all right, and funding a project, okay, because if one bank to do it alone, then the fund is too large. Is that okay? Clear? Okay, that is a consortium bank. Okay, they are joint venture to fund, all right, the money. Okay, joint venture bank. All right. Next. All right, next, off-balance sheet activities in the international banking. All right, so you know, right? Off-balance sheet is all about what? It is the accounting practice, okay, where company keep certain assets and liabilities for being reported in balance sheets. Right, because it's not clear, or because they didn't receive it, or because they want to look good in their balance sheet. Guys, is it clear? All right. Okay. Because they want to look good. Okay. So it include what? What are things that sometimes they didn't include, such as for derivative transaction, derivative things, right? Futures, forward options, right? Earnings generated from off balance sheets are fee related and not shown on the balance sheet. Okay. All right. So derivatives are contract involving, you know, right? Derivatives is right to buy, okay? A right or obligation relating to purchases of sales, okay, of underlying real financial assets, okay, like gold or shells, okay? So what is arbitrage? Okay, you know already, I guess. Arbitrage is what? Take advantage of different price, okay? The easy says, we can say that take advantage of different price, okay? Buy and selling in other market to exploit the price differential. Buy low, sell high. That is arbitrage, okay? You take advantage of different price, okay? What is hedging? Hedging is what? It is a risk management technique to reduce the risk exposure, right? To reduce the exposure, we call it as the hedging. It is one of the risk management tools, okay? All right. Okay, this is off balance sheet. I guess you know, right? The futures is all about what? Buy or sell the commodity or security on a specified date, right? Financial futures, okay? So it's a contract to deliver and pay for real or financial asset or pre-arranged date in the future for a specified price, okay? And forward, you know, right? Okay, so you buy or sell, okay, buy or sell to trade in the future dates, okay? That's it, all right? All right, so options, you have right to buy or sell, okay, a financial instrument, okay? I guess the one is no problem for you guys. All right, okay. Next, swap, okay. Swap means what? Swap means two parties exchange the financial instrument. Okay, two parties exchange the financial instruments. Okay, so if you want to write, it's something like that. An agreement between two parties to exchange two different forms of payment obligations. They can be thought as exchanges of cash flows used to manage their asset liability structure or to reduce their cost of borrowing. So this is what two parties exchange their financial instrument. Okay, next. All right. So other off-balance sheet activities like what? Loan commitments, financial guarantees, right? Securities financial services. Okay. So this you may go through the slides and you may read what are those things. Okay. Loan commitments is all about what? The promises to lend out, right? Money businesses loan are made by loan commitments, right? Next, they have these financial guarantees. Okay. So are the instruments used to enhance the credit standing of a borrower. Okay, designed to ensure the timely repayment of the principal and interest from a loan even if the borrower goes bankrupt. Okay. And next, you have this security underwriting. This is all of the things under the OBS activities offered by bank. Okay. Right. Then they have the securities underwriting. Okay. So it's a type of business typically undertaken by investment bank, okay, agrees to buy a set amount of the securities that are not taken up in the issue, okay. So, and the bank charge a compensation fees for taking the IPOs, right? Yeah, initial public offering, okay, to market, and also is through stocks, okay. Next, okay, other financial services, okay, they generate fees, right? They include advisory services that banks give the organization. They include bank originates a loan in exchange for a fee, then transfer it to another bank. Okay, so this is another service provided for off balance sheets. Okay. Okay, guys. Bank lending activities. I guess you just read by your own. Okay. They have loan origination. Okay. Administration and processing of paperwork. Okay. Undertaking risk and design of loan contract and loan pricing. Okay. That's things. Okay. This is 3 points there. Right. And provision of funding to the borrower. Okay. They're raising finance. They're holding the assets of the balance sheets. Okay. And what are the servicing that they provide? They're collecting loan payments and also the bookkeeping, right? Okay. And bank lending activities also go for monitoring activities, okay, like post lending monitoring to control the credit risk and diversification to control default risk. Okay. I guess that's all for topic 7. Okay. We rest for 5 minutes, then we continue with topic 8. Is it okay? All right, guys. So we start at 11:38. Yeah. Hello, guys. We start at 11:38. Is it okay? All right. All right. Okay. Now we continue with topic 8. All right. So I changed the design for this slide as the one that we downloaded from Weibo is we can't read, right? Because there's a gray background at the back. All right. So I remove it. Okay. All right. So topic 8 is all about bank and financial regulations. Guys, when we are talking on the financial regulations, okay, so it's all about the facts, right? Regulations. Okay, it's hard for us to explain, right? Because it's all there, right? You have to follow bank regulations. Okay, it's just like the instruction you have to follow. So, so it's all about this topic 8. Okay. Okay, so the functions of bank regulation, of course, why they have to follow the bank regulations? To ensure the safety and soundness of bank. Okay, because when you're talking about bank, of course, it's all about the safety, right? Provide an efficient and competitive financial system. Yes, okay. Provide monetary stability. Okay, monetary stability means what? Okay, there's a confidence, right, to use your currencies. Okay, the price can be controlled. That is the monetary stability. Okay, maintain the integrity of the payment systems. Yes, and protect consumers from abuses. Okay, abuses means what? False marketing, for example, scams. Okay, that is the functions of the bank regulations. Okay, okay, types of regulation they have three: systematic, prudential, and conduct of business regulations. Okay, we go for systematic regulation first. Okay, government safety net. Okay, publicly policy regulation designed to minimize the risk of bank runs. Okay, of course, regulations. Okay, they encompasses of two features: deposit insurance and lender of last resort. Okay, guys, so lender of last resort here is home. Of course, we know that it is a central bank because they provide the liquidity to financial institutions, right? Prudential regulations, they mainly concern with consumer protection and relates to monitoring and supervision of financial institutions with attention to paid and capital adequacy. Okay, guys, you can hear me, right? Are you with me? All right, good. Yes, like that. All right. Okay, so, okay, next. Okay, the third one is what? Conduct of business regulations. They focuses on how bank and financial institutions conduct their businesses. Okay, relates to what? Disclosure, fair business practices, competence, honesty, and the integrity of the financial institutions. Okay. Okay. Causes of regulatory reform. International and constitution trend bank offer service cross-border. Why? Because what are the causes of regulatory reform? Because of the internationalization and globalization trends. Okay. Okay. They have growth in international activities, trade, and of multinational corporations. They also have a demand, right? Where's the okay? They also have the demand, right? A demand increase from the financial institutions. Okay, like we have here HSBC, right? Citibank, okay, here in Malaysia, okay. So they operate as the universal bank. So when they have a demand, okay, they can come up with the financial innovation. They come up with the new products and services to emerge, okay, to provide the needs in the market, okay. So the growth of balance sheet activities, okay. Next. Okay, UK Financial Services Authority. You also have this in your tutorial questions. Okay, so what is the UK Financial Services Authority? This is the independent non-governmental body, okay, for Treasury Minister and the Parliament, right? So the exercises, okay, its statutory powers under Financial Services and Market, all right, Act. Okay. So what are the objectives of this FSA? Okay. First is what? To maintain confidence in the UK financial system. To promote public understanding of financial system, to secure an appropriate degree of protection for consumers, and to reduce scope for financial crime. So remember what are those keywords there, all right? First is what? To maintain, all right? Second is to promote, okay? To secure and to reduce, okay? So this is the keyword for the objective of the Financial Service Authority for UK, all right? So just now we are talking on the objective. Now is the responsibilities of this Financial Services Authority. Okay, so they have Lions Insurance Market. So this is one of the big insurance company in London. Okay, they have a good shares. Okay, for the insurance products. Okay, Lions Insurance Market. Okay, the code of market conduct. Okay, unfair terms in consumer contracts. They recognize the overseas investment exchanges, regulations of a certain aspect of mortgage lending, okay, and supervision of the credit union. So how many responsibilities of this FSA? 1, 2, 3, 4, 5, right? 6, okay. So this is the responsibilities of this Financial Services Authority, okay. Next. Bank of International Settlement. Okay, right. So what is the Bank International Settlement? This is the intergovernmental organization of central bank which fosters international monetary and financial cooperation and services as bank for central bank. It is not accountable to any national government. Okay, they carries out what? Work through subordinate secretaries and host through its general meeting of the committees, right? They provide banking services, okay, to banks, okay, or to international bank, okay, right? Okay, they seek to make monetary policy more predictable and transparent among 58 members of central bank, okay. All right, so it says there, monetary policy is determined by each sovereign nation, okay, subject to central and private banking, okay, and potentially to speculation to central and private banking, okay. Failures to keep monetary policy in line and make monetary reform time, they have led to losses in the million, okay. That's the things, right? Right. Two aspects of monetary policy have proven to be particularly sensitive, okay, which is to regulate capital adequacy, right, and make reserve requirement transparent, right. Next, okay, capital adequacy. You know, right? How much you need to have capital in the bank, right? Okay, how much liability cannot be more than the capital. Okay, so this BRS requires the capital asset ratio of central bank to be above the prescribed minimum of the international standard. Okay, why? For the protection of central bank involved. Okay, so they have to follow all these things. Okay, so the main role is what? To setting capital adequacy requirements, right? Okay, reserve transparency. Okay, why it is important? Because to ensure liquidity and limit to larger economy. Bank cannot create money in specific industries or region without limit. Okay, to make depositing and borrowing safer to customer and to reduce the bank runs, bank are required to set aside for a reserve. Guys, so this is about the reason that they have to follow the limit that they have to follow the minimum requirement, right? Okay, so you know, right? Next we go for 1988. This is what? Basel 1. Okay, Basel 1 is you know, right? Basel, it is the Committee of Banking Supervision, was created at the end of 1974. Okay, measuring capital adequacy, okay, and prescription of minimum capital standards. Okay, So they introduced in this Basel I in July 1988. Okay. Okay, for this Basel I, right? Okay. So they established the international standard around the capital ratio. Okay, they put aside, they stated that 8% and focus on risk associated with the lending. Okay, so the two elements that they for the capital, okay, core capital and the capital. So they combine tier 1 with tier 2 for this Basel I, right? So this tier 1 capital, okay, they have this discussed on the common stocks and surplus, right? Undivided profits, qualifying non-cumulative preferred stocks, okay, minority interest in the equity accounts of constituted subsidiaries, and selected identifiable intangible assets, okay, for intangible assets, okay. Next, for the tier 2, they have allowance for loans and lease losses, okay, subordinates, okay, mandatory convertible debts, okay, cumulative perpetual, right, equity notes, right, and other long-term instrument that can combine debts and equity features. Okay, so the agreement for this Basel I, it is what, like we discussed earlier, they need what, a minimum requirement of 8% of capital. Okay, right. So of course, when they come up with Basel I at 1988, so there's a few problems, right? What are those things? Okay, first is what, unable to distinguish between good and poor quality credits. Okay, unable to distinguish, right? Little impact on risk. Okay, maybe because at that time there's no much risk, okay, on the decision of the bank involved, okay. Capital arbitrage opportunities, right? Capital ratios, a misleading indicator for bank risk, okay, because it is earlier, right, set up in 1988. They only focus on financial measures and they have lacked the mechanism to improve the risk management processes, okay. So they come out with the Basel II, okay. So mostly the Basel II, they what? Basel II, they focus on the risk management. Okay, they focus on the risk, right? Say, okay. So they maintains of overall capital levels globally. Okay, they promote competitive equality. To promote a comprehensive risk management. Okay, before this they do have, right, in Basel I, right? So now they are more sensitive to risk. And they focus on international active banks but applicable to all. Okay. Okay. So we know, right, it is an extent from Basel I, okay, to increase sensitivity to different level of asset and of balance sheet risk. Okay. So what are the main elements of Basel II? Okay. Like we discussed earlier, because they are more sensitive to risk. Okay. The credit risk of banks. Okay. Market risk of bank trading activities. Operational risk. Okay. Operational risk. Okay. Form and quality of capital held to support these exposures. Right. Risk identification measures. Right. Okay. And transparency through accumulation and reporting the information. Okay, so this is a new framework, okay, in 2008. Okay, risk weight factors are determined by the ratings, the calculation of market risk almost before. Okay, so the capital divided by risk, okay, minus weighted assets plus the market risk plus operational risk. So it must be bigger and same of 8%, right? This is the Basel II structure. Okay. Okay, mostly they discuss on the credit risk, operational risk, and market risk. Right, they standardize the approach. Pillar 2, they have supervisory review and market disciplines for Pillar 3. Okay, so they are more look on the risk, right? Okay, so this one, I guess you may read by your own. Okay, Pillar 1, credit risk, that borrower will not meet commitments when due, right? Okay. When borrower didn't pay their commitments, so it is a credit risk for a bank, right? They don't receive money, so it is less liquid. All right. Okay. Next, operational risk. Okay. Risk of a loss from inadequate or failure in the process. Okay. People, system, or from external events. So it falls under operational risk. Okay. Next, how about the market risk? Okay. Exchange rate, interest rates. Okay. Okay. Foreign exchange market. Okay. Equities and the commodities. Okay. It falls under the market risk. All right. Next, supervisory review. Okay. So to ensure banks have sufficient capital to support all risks and encourage improved risk management policies, practices in identifying, measuring, and managing risk exposure. Like what? Risk incomplete. Okay. Additional risk management such as education, training, responsibilities. I guess you merit by your own. All right. So the third one is third pillar, market discipline. What they do, all right, aim to develop disclosure requirements that allow the market to assess information on capital adequacy, right, to increase transparency, okay, prudential supervisors to determine minimum disclosure, okay, and they recommends a range of qualitative and quantitative information disclosure relate to principles of Pillar 1 and Pillar 2, okay. Now it is Basel III, okay, a new global regulatory standard of bank, okay, okay. So why they developed this Basel III in response of deficiencies in financial regulation revealed by the global financial crisis, right? Now, crisis is happening, all right? So how they reflect, okay? They respond, they come out with this Basel III, okay? They strengthen bank capital requirements, okay? How much liquids, okay? Bank, they have to reserve the money, the capital inside. Introduces new regulatory requirements on bank liquidity, yes, okay? Because they need to update, right, the regulations, okay? I guess that's all for topic 8 for today. So it's all about the regulations. Nothing much to highlight on those key points there, right? Okay, guys, any questions? Guys, any questions? Hello, guys. All right, guys. So we finished today. All right. Thank you for joining me for, even though this is public holiday, because Miss Nurul told me that you have a class today. That's why I replaced her. Okay. So next week we go for online. Yeah. Next week we go for online. We finish this class through online. Is it okay, guys? We finish this lecture class online. Do you agree or not? Okay, I guess it's good online because you can refer back to the slides, all right? And hopefully, all right, during our last class, we can call Miss Nurul, okay, to join us for like 10 minutes to give you guys last advice. Is it okay? Right, guys. So maybe during our last class, I will invite her for like 10 minutes, okay, to advise you on something, okay, so that we clear for your final exam, okay. So I guess that's all for today. For tutorial T3, okay, tomorrow we also go online, yeah, right? T3, we just continue what Miss Nurul did before, right? So T3 tomorrow class like usual, okay? Okay, guys, thank you very much. Then, guys, since today is public holiday. There's no QR, but no worries for your attendance. Okay. Okay. No worries for your attendance for today. Is it okay? We sure? All right, guys. So see you guys next week. For those who have class tomorrow, then don't forget. Thank you, guys. Have a good holiday, public holiday, and take care.